at a time when there's concern across the globe, the general trade has been to trade into U.S. assets as a flight to safety. That's not happening now. The dollar is selling off this morning against a broad range of currencies. Yields have been elevated. Is it curious to you, and what is it telling you, that there is no obvious or traditional flight to safety in the current environment?
Yeah, I think your observation goes to the heart of the matter, and I always go back to fundamentals. Why do we have a trade deficit in America for decades? It's because this is just the math of economics. Investors around the world have viewed America as the best place to invest. And if that's true, we will have a trade deficit. And so now one of the ways that expresses itself is in lower yields across asset classes in America. So if the trade deficit's going to go down, it could be that investors are saying, okay, America no longer is the most attractive place in the world to invest. And then you would expect to see bond yields go up. Now, it also could be inflation, and that's why this matters a lot to the Fed. I'm not seeing evidence yet that long-run inflation expectations are climbing, and it's the Fed's job to make sure that that doesn't happen. But I would expect to see, if investors decide, hey, we want to invest elsewhere, all else equal, that ought to be pushing up yields, and you'd see that in what we call the term premium.
Neil, can I just throw one other possibility on that? These are pretty short-term moves. We hope they don't become longer-term moves. Could it be a reflection of hedge funds and others that were leveraged and needed to sell things as equity markets dropped, selling the assets that are most liquid and trying to make sure that they have the cash to pay whatever comes?
Certainly, there's a lot of, you're right, Becky, there's a lot of complexity. The basis trade has been getting a lot of attention. But I would just point to something that Steve mentioned, which I think reinforces the story a little bit, and that is that the dollar has been weakening. Normally, when you see big tariff increases, I would have expected the dollar to go up. The fact that the dollar is going down at the same time, I think, lends some more credibility to the story of investor preferences shifting.